This is Vishal Malkan and I'm going to talk about momentum indicator today. What is momentum indicator? Momentum indicator helps you to know the speed of the market. It's an important tool in technical analysis. So we'll talk about an important tool called RSI today. Now there are so many other indicators like stochastic, ADX and Bollinger Bands and MACD, but RSI is my favorite and it's very simple. Now RSI was initially developed by Wells Wilder, and it was later worked upon by Andrew Cardwell. So there are two approaches. One is called the conventional approach and one is called the unconventional approach. So we are going to look at more of the unconventional approach. So let's have on your screen RSI. Now relative strength index, momentum. Now momentum indicator, first let's understand momentum and then go into RSI. Momentum is like speedometer in your car, which helps you to know the speed of the car, which is either it's going fast, slow or medium. In the same way, this momentum indicator will tell you whether it's an uptrend, downtrend or sideways market. So let's look at the unconventional RSI, which is very, very simple. Now we'll divide. It's a banded oscillator. Banded matlab, it's going to be between 0 to 100. So let's see this. Now when you look at this indicator, we'll draw the lines between 40, 60. Now conventionally, people use 70, 30 for overbought, oversold. We'll not use them. We'll use a different approach. So we'll make it very simple. So if the RSI is below 40, that means the stock is in a downtrend. Simple. We don't touch them, either we short them. If the stock is between 40, 60, that means the stock is in sideways market, choppy market, range bound market. So we don't do anything, or we do support resistance trading, or we can do option writing. And the third is above 60, it's a bullish. So that means we have divided the whole part into three and we trade accordingly. Now this can be a short-term time frame or a long-term time frame. This could be daily, weekly or monthly. It could be commodity, currency or equity. Doesn't matter. The chart remains the same, right? So if there is a myth about market, stock market or technical analysis that it can be only used for short-term. We can use only for long-term as well. So let's see some chart where you can see clearly when RSI is above 60, there is a strong uptrend in the market. You see this twice in this chart. Then on the next, you can see thrice in this chart. And whenever it goes below 60, it gets slightly slow, like sideways. Let's see this one. Here there are examples of uptrend, then sideways trend, then uptrend, then again sideways trend. So you can look at that in the chart again. So now I know how to position my trade. I can accelerate my trade, or I can go back on my trade, exit and wait for the fresh buy, right? So this is how there's no other tool or technique. We make it very simple and clean and neat so that you can execute. I know it's not enough. You need to see more of charts, more practice before you actually execute this strategy. Now, and there are a lot of videos on my YouTube channel where you can learn RSI in detail about divergences, reverse divergences, range and all that. But this is the base of everything, right? So this is another uptrend where you can see there is a strong uptrend when RSI is above 60. That's like it's going at 220 speed. Right. First of all, you should be buyer, or you can add more positions, or you should at least not short about it, not think about buying, selling, or buying puts in this one. Then look at some charts which are uptrend again, and let's go back to the chart where we can see sideways market. Now here see that the range is between 40, 60, and the price is also moving in the same range. So it's a dead stock or it's a dead trend. Either you don't do anything, or you do support resistance trading, or you can write options in this. Now this could be a weekly chart, which is a weekly chart. That means it's going sideways for weeks, right? So you can't invest in this. Let's say this was for months, then you can't buy a long-term thing also. So if it's a long-term sideways, you avoid it completely. Let's go and check few more charts where we can see this 40, 60 is a range, which does not allow the stock to go up. Once it crosses, then you get into it, like a breakout, right? Let's look at more of these where you understand between 40, 60, not to do anything. That's a daily, weekly, any chart. Let's look at some interesting charts on the downside. Now, when you see this, when it goes below 40, that means it's an indication that the stock is moving down in a fast way. So, first of all, don't try to catch a bottom, which most people try to do. And you can short this or at least exit out of this stock and wait for a fresh entry when it goes above 40 at least, and then above 60 for ideal momentum trading. So if you divide the whole chart into three parts like I have done here, you can see one more strong downtrend when the RSI is below 40, right? So this how simple, you're on another chart where you can see RSI is below 40. So now the clear trend is what? That once RSI goes above 60, you should think about buying. If it is between 40, 60, you should think about avoiding that stock or going support resistance trading. And if it is below 40, then you should think about shorting or at least avoiding for any kind of buy position. This is how simple RSI can get. Don't complicate it. And there are a lot of videos on YouTube channel. You can check them out. And this was the concept of momentum. And I'm going to come up with more concepts on this channel in this simple manner. And I'll see you in the next video. Till then, good luck and good trading.